Bitcoin, Bitcoin, Bitcoin. I mean, talk about the pivot line that I've had on my chart and walked you guys through for now, like probably like a month, if not longer than a month. Well, last week was a great week on Bitcoin, but what did I say in every single game plan? I said, listen,
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, let's talk about Bitcoin and more.
we're looking at gold first. We'll get right to Bitcoin in a second. But notice gold, again, gold continues to grind up here in anticipation of a dovish Fed, right? So especially now that the Fed is now favoring a 50 basis point cut per the Fed Watch tool, that does tell us that gold could be headed towards that 2,660 level. Now, again, I want to show you guys real quick how I came up with that $2,660 price target. I don't find anything fancy. Like so many of these people, by the way, they come up with these crazy, like way out of left field, like target prices and stuff like that. I'm very direct and logical. The chart has to tell me. If the chart's not telling me, then I don't have anything. All right, I don't have a crystal ball that tells me anything in particular. It's literally just go to the charts and what do the charts tell you? So what I did was I switched to my logarithmic view, and logarithmic bases the charts on basically percentages versus price. And I think that's why it's so useful. So if we zoom out on this, and when you go back a long time or something like Bitcoin, you have to kind of use log because otherwise it's too hard to kind of work through. But when we go to gold here, what do we see? We see there's a pivot high from the 1979 high bull run on gold that goes back right to here. Okay, then you have this logarithmic high pivot in 2011. And the concept is just connect the dots, right? We're not trying to reinvent the wheel. We're not trying to give you guys fancy, I'll use these 10 indicators that make your chart look like this, right? I mean, how many times do you guys watch videos where it's like, oh, guys, don't you see? Look at all the levels here. Isn't that awesome? Like, can't you tell that it's going to go there? No. That's BS. Come on. Let's keep it simple, right? So all we're going to do here is we're going to take a simple trend line connected to that high pivot from the bull market of 79 to the high pivot of the bull market in 2011 and just stretch that line out, right? And what you get when you do that, and we zoom in on it, is very clearly a level right up here, which tells us our next resistance point on gold, $2,660. Now, $2,650, $2,660, $26, right in that vicinity, right? I mean, don't quote me on that exact high, but that's that level right there. All right, so again, it just gives us another place to look where if it hits it, we might get a pullback. And the reason why I like pullbacks in gold is because they're buying opportunities, right? So again, at some point, we'll get even a bigger pullback because I think too many people are continuing to get on the long side. I thought we'd honestly already get a pullback. It hasn't happened yet, but that's all we're doing here. And it works. That's the crazy thing. Sometimes, like if you look at the best traders in the world, most of them keep it so simple. They don't have a lot of indicators on their charts. They literally use trend line analysis, which is my favorite thing. Parallel lines, which are trend lines, connecting the dots essentially, like when we were kids and we always used to play those games and connect the dots. All right, on to silver. Then we're going to get right into Bitcoin here, guys. If we look at silver, the silver chart's actually performing relatively well here. It did break out above a key level here. If we look at this downsloping trend line, even here, we are just above this one for the time being. Now, resistance, needless to say, is going to be $32.50. So, number one, we have to see, does it close above this line today or back below? So, watch that. If it continues to move up, this high pivot right here, which is around 32, I think it's right around 32.50 or so, that's going to be your key resistance on the chart of silver. All right, next up, let's get right into Bitcoin here so we can kind of take a look at what is going on.
Bitcoin faces a pivotal week, hovering around $60,000 as the market anticipates a potential 0.5% Federal Reserve rate cut. Analysts are watching for key price movements and volatility. The Federal Reserve's upcoming meeting on September 18 could bring the first rate cut in over 4 years. Markets expect a 0.5% reduction, which could support risk assets like Bitcoin. However, some analysts warn that aggressive cuts signal deeper economic concerns. Bitcoin is trading near $59,000. struggling to maintain the $60,000 support. A breakout above $60,000 is essential to improve the daily and weekly technical outlook. Bitcoin traders are bracing for volatility. Analyst Mark Cullen called it a choppy week for BTC as the market digests macroeconomic events, with bullish upside possible if key support holds. Bitcoin remains below key Ichimoku trendlines and RSI levels, which continue to act as resistance. Breaking these levels could open the door for further upside. While Bitcoin holds dominance, Ethereum is hitting multi-year lows against BTC. Bitcoin's market cap dominance reached 58%, marking the highest level since April 2021. This week's Federal Reserve decision could be a turning point for Bitcoin, with the potential for either a rally or more downside depending on the market reaction to rate cuts.
Bitcoin, Bitcoin, Bitcoin. I mean, talk about the pivot line that I've had on my chart and walked you guys through for now, probably a month, if not longer than a month. Well, last week was a great week on Bitcoin, but what did I say in every single game plan? I said, listen, great move up, but unless it gets above this line and confirms, you factor in likely pullback. What happens to Bitcoin? Goes right up to it, rejected. That's the power of charts. And again, it's not that hard. It's just, it's basically the midpoint of the channel, and it works. And so what do we know from this? Well, the same thing that I've said to you guys every day, which is that if it confirms above here, boom, it should literally in days probably shoot up there. As long as it stays below, you could easily pull back here and potentially even go down here. So just be aware of that. You can have bounces interim, right? It can go here and then bounce here. Heck, it could go there, bounce up there, then go down. But ultimately, that's your level to watch right there. Okay, lastly, quickly going to oil today, guys. Oil is pushing up. I still have a potential short level on oil here. If it gets back to this level, I likely will pull the trigger on a short. Interestingly enough, look at this. So you have a down-sloping trend line and an up-sloping trend line right here. So basically 72 to 73, maybe a little bit above 73. That'll be a good level. You expect a breakdown, it confirmed retrace like that. And again, if I'm correct on the macro data, which I could be wrong, but all the things I'm looking at, inverted yield curve now on inverting, Fed starts cutting rates, markets turn down, economy, why is the Fed cutting 50 basis points maybe? Well, they obviously know that the economy is weakening quickly. All those factors tell us about downside. All right, natural gas, lastly, guys, let's touch base on this one. And natural gas did get rejected at this level. A little disappointing. I'm going to be honest with you guys. I'm a little disappointed because I was hoping it would get a little higher and I'd get a short off just above $2.60. I didn't get it. But the cool thing about it is so many people get bent out of shape by missing a trade that it causes them to chase that trade like they'll enter now. I will never do that because it's my level or nothing. And again, that's the discipline that allows me not always to get good entries because sometimes it doesn't matter how good you are in this game. I still have crappy trades. I still have trades that I miss something on or it doesn't go my way, and that's the nature of it. That's probabilities. But the key is I want to limit that. I want to maintain a 70, 80% success rate in trading, and that's what we can do by being disciplined and following the simple charts. I call it the simple charts because you don't need all the crazy indicators. You need a few trend lines, know your support resistance levels, and know confirmation, know the stuff I teach in the Winning Traders series.
BlackRock faces allegations that its Bitcoin investments made through Coinbase are not in actual Bitcoin, but in contracts. Both companies have responded to clarify and dismiss these claims, while the controversy continues to stir debate within the crypto community. The controversy began with claims from Justin Sun that BlackRock invested in Bitcoin through Coinbase-issued UIO, unidentified investment objects, contracts instead of real Bitcoin. The rumors spread quickly, leading to widespread debate on social media. Coinbase CEO Brian Armstrong addressed these concerns, explaining that exchange-traded funds, ETF, involve on-chain minting and burning within one business day and are regularly audited by Deloitte. He also noted that institutional clients often use OTC options for large transactions. Critics like Justin Sun argue that using centralized products like QBTC contradicts Bitcoin's decentralized vision. However, market experts, such as Nate Geraci, reiterated that ETF genuinely hold the assets they claim. Geraci firmly dismissed the allegations, emphasizing that ETF are backed by real assets, regardless of the method used by Coinbase. A Bitcoin whale has made headlines by moving 119 BTC, $7.14 million, into Binance, capturing market attention ahead of the U.S. Federal Reserve's interest rate decision. The whale's strategic actions may signal preparation for market shifts driven by Fed policy changes. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.